Last week, Statistics Canada dropped a number that sent shocks through every newsroom in the country. Canada's GDP, the total value of everything our economy produces, shrank for the second quarter in a row. And according to the most widely accepted definition in economics, that means Canada is officially in a technical recession. But here's the thing, not everybody agrees. Some of Canada's top economists are pushing back on that label. And honestly, the debate is really important. So today, we're breaking it all down. What is a technical recession? Is Canada actually in one? And most importantly, what does it mean for your job, your mortgage, and your money? Welcome back to KP Money Talks. Hit that like button and subscribe, and let's get into it. Here's what Statistics Canada actually reported on May 29, 2026. Canada's real GDP, that's GDP adjusted for inflation, fell by 0.1% on an annualized basis in quarter one of 2026. That's January through March. Now that's barely a decline, almost zero, but it follows a 1% annualized drop in quarter four of 2025. That's October through December. 2 consecutive quarters of negative GDP growth back to back. And here's why these numbers matter. Economists had actually predicted 1.5% growth in quarter one. Canada was supposed to be bouncing back. Instead, we went further into the red. And here's the stat that should really catch your attention. 3 out of the last 4 quarters in Canada have posted negative GDP growth. It's not a blip, that's a pattern. So what exactly is a technical recession? And why do we say technical? A recession in plain English is when the economy shrinks and people start feeling real pain. Job losses, business closures, falling incomes. A technical recession is a more specific mathematical definition. 2 consecutive quarters of negative GDP growth. Full stop. No other criteria required. Think of it as like a fever. The doctor might say that your temperature is technically elevated, but whether you're actually sick, whether you need treatment, depends on your other symptoms too. Canada right now has 2 negative quarters. That's the technical definition checked out. But the broader symptoms, widespread job losses, business failures, and collapsing consumer spending, those haven't fully shown up yet, which is exactly why economists are debating whether to actually call it a recession. Here's where it gets fascinating. The same data, 2 very different readings. On one side, the data is clear. GDP fell in quarter 4 2025. GDP fell again in quarter 1 2026. But traditional definition of Canada is in a technical recession. Full stop. On the other side, BMO Capital Markets told investors that the R word overstates the damage. Why? Because the quarter 1 decline was heavily driven by a surge in gold imports, which is a one-time statistical quirk, not a sign of economic collapse. Strip that out and the picture looks less alarming. One of the economists at TD Bank states, the decline in quarter 1 was basically zero and could easily be revised upward in future Statistics Canada reports. And there's actually a reason for some optimism. Statistics Canada early estimate for April shows a sharp bounce back of 0.4% growth in just 1 month. So is Canada technically in a recession? Yes. By the numbers. Is the economy collapsing? Not yet. But it is struggling, absolutely. So what actually pushed Canada into negative territory? Well, a few key culprits. First, US tariffs. Business capital investment fell for the 5th consecutive quarter, 5 quarters in a row. Businesses are refusing to invest. Why? Because with no clarity on what the trade relationship with the US looks like, companies are in a holding pattern. Dan Kelly of the Canadian Federation of Independent Businesses said it best. Most small businesses are treading water, hoping for brighter days. Second key culprit, the housing market. Housing investment dropped again in quarter 1, dragged down by weak resale activity across the country. Third, rising energy costs. Oil near $100 a barrel because of the conflict in the Middle East has pushed costs up for businesses and consumers alike, squeezing spending and investment at the same time. Essentially, Canada is being hit from multiple directions simultaneously, and that's what makes the moment so uncomfortable. Alright, so what does all of this actually mean for your life? Let's start with your job. In a slowing economy, companies freeze hiring first, then cut. If you're in sectors tied to trade, construction, or business investments, pay close attention to your company's plan for the rest of the year. Your mortgage. Here's a silver lining. The terrible GDP data has basically thrown cold water on any talks of rate hikes. BMO's chief economist said the economy is in no condition to deal with higher rates. That means the Bank of Canada's June 10th decision is almost certainly a hold, and rate cuts would actually come sooner than expected. Your spending power. Consumer spending was actually a bright spot in quarter one. Canadians kept spending on food and financial services, but with trade uncertainty and job market softness, this won't hold indefinitely. And here's the big picture. Canada is at a fork in the road. If April's early bounce back turns into genuine quarter two growth, we may look back at this as a brief stumble. If trade tensions escalate and business confidence stays low, this could deepen into something more serious. So, here's the bottom line. Canada has technically met the definition of a recession, 2 consecutive quarters of negative GDP growth, but the data is razor thin. Economists are genuinely divided, and April's early numbers suggest a possible rebound. What do we know for sure? The economy is fragile. Trade uncertainty is freezing investment, and the next few months, including the Bank of Canada's June 10th rate decision and the USMCA deadline on June 1st, are going to be critical. This story is not over, and I'll be covering every development right here on this channel. If the video helped you actually understand what's happening in Canada's economy right now, hit subscribe. Share it with someone who's been hearing recession in the news and has no idea what that means, and drop a comment below. I love to read these comments. Alright, and I'll see you in the next one.